straight off the bat, on both sides, we have some incredible brands. So if we look at Coca-Cola first, you can see that they have their Minute Maid, they have Sprite, Fanta, of course their Coca-Cola products. They also own Powerade, which I had no idea that they actually own, which is pretty crazy. They actually own a 20% stake in Monster Energy drinks too, which is actually the Monster Energy is actually looking to merge with another brand called Constellation Brands. But yeah, I'm not too sure that Coca-Cola are too happy with that at the moment. Coca-Cola own Fairlife, and they also recently acquired Costa. So for those of you who don't know, Costa Coffee is one of the UK's most loved coffee chains here. And that is, it is a huge deal for them to have acquired Costa Coffee. I think the deal was about 4 point something billion pounds or dollars, just something absolutely crazy. But you can see that their focus is to get into the hot drinks market. And, they could have gone on their own and, tried to create, their own hot drinks brand. They could have done that, with fair success. However, given Costa has their distribution network sorted and Coca-Cola knows how to do distribution of their products really well, I think it was just an amazing acquisition to just get their foot, in the door when it comes to the coffee world, and then, being able to take on Starbucks over time, which is a huge thing, which I don't think anybody really expected Coca-Cola to do. So, yeah, those are some of their brands. Oh, they also have Schweppes there, which is pretty interesting too. And yeah, so a massive portfolio. I think we have Dasani water there too, which is incredible. I had no idea that was owned by them also. And yeah, but then you also have Pepsi. And a lot of people don't realize how extensive Pepsi's portfolio is too. So you got Lay's, Mountain Dew, Gatorade, 7-Up, Tropicana. Tropicana was actually one of, if not their largest acquisition, alongside Quaker Oats. I think Quaker Oats was about $13 billion, the acquisition of that. And that is crazy because I eat Quaker Oats every single day. So, and I know there's probably, thousands of you guys watching, or hundreds of you guys at the moment, who probably consume oats. Or maybe you're just not as much of a grandpa as I am, but I love oats. Then you have Cheetos, Mirinda, Lipton, that's huge here in the UK. Naked Drinks, Ruffles, not a big consumer of Ruffles. And when I say not a big consumer, I mean I've had them once in my life. I don't think they're super huge here in the UK, but we have Lay's here in the UK, but it's not actually called Lay's. We on our packaging, the trading name is Walker's, so that is a massive brand, obviously that's owned by Lay's. Mountain Dew, Diet to Mountain Dew, and then Starbucks. So they don't actually own Starbucks; they own the rights to distribute a bunch of Starbucks products. In the US, they have some exclusive distribution rights to certain drinks, like the frozen lattes or the iced lattes or whatever it is. I don't know in detail. And yeah, so, on either end of this, we have two very extensive portfolios, one leaning more towards beverages and one leaning more towards both beverages and snacks. So massive portfolios. Now, let's look at some finances. Now, I hope these colors don't just break your brain, but I tried to make it so that green equals the winner and red equals the loser. So, first up, payout ratio. You can see Coca-Cola has a 74% payout ratio, which is actually down because their payout ratio was above 80%, I don't know, a year or two ago. So that's really good. Payout ratio for Pepsi is 77%. Now, just because I put things in red doesn't mean that it's inherently bad at all. Like a 77% payout ratio isn't bad for a very well-established company, like Pepsi. And it's not far off Coca-Cola's anyway, but I'm just putting, red and green as to what wins and so on. As for revenue, 2021 revenue for Coca-Cola was $38 billion, which is up $5 billion, compared to Pepsi's revenue in 2021, which was $77 billion, up $9 billion from the previous year. As for debt, Coca-Cola currently has about $42 billion in total debt, whereas Pepsi, who is actually the bigger company, has debt of $40 billion. As for free cash flow, Coca-Cola has juicy free cash flow of $11.2 billion. So free cash flow is cash from operations minus capital expenditures. Capital expenditures, any income spent on the enhancement of fixed assets, factories, plants, buildings, stuff like that. So Coca-Cola has $11.2 billion in free cash flow this year, or last year, sorry. And Pepsi had $6.9 billion in free cash flow, so considerably less, almost half. As for dividends paid from free cash flow for Coca-Cola, so that was $7.25 billion. So you can see that their $11.2 billion free cash flow easily covers that $7.25 billion in dividends paid. So that's really awesome to see. Now, when looking at Pepsi, you can see that from their $6.9 billion in free cash flow, out of that, their dividends were paid, and that was $5.8 billion. So, they have the coverage there. However, when you're comparing the free cash flow to dividend payout ratio, it's definitely Coca-Cola that wins that. Now, shares outstanding, you can see Coca-Cola has 4.3 billion shares outstanding, which is an increase of, I think it was about 100 million shares from last year. So, when shares increase, that's not a good thing. We don't want to see that. As for Pepsi, 1.38 billion shares outstanding, which is also an increase from their previous year also. But, over the last couple of years, a lot of companies have been, issuing shares, and it's not always, to keep operations going. Sometimes, companies issue shares so that they can acquire other companies. So it's not always, a last resort. A lot of the times it's very strategically done. So, and with these companies, it will definitely be strategic, stock issuances. As for dividend yield, Coca-Cola has a dividend yield of 2.8%, whereas Pepsi has a dividend yield of 2.63%. It should actually be Coca-Cola that's in green there, so I apologize. As for the quarterly dividend, Coca-Cola announced an increase recently from 42 cents per share to 44 cents, which is awesome. But Pepsi pays the larger dividend of $1.7 per share per quarter. As for dividend payment streaks, you can see Coca-Cola have paid 58 years consecutively, which is absolutely insane. And this year, Pepsi paid their 50th year of dividends. So, these are both companies who, have paid very secure and very, awesome dividends that have consistently grown. Talking about consistently growing, let's take a look at their dividend growth rate. So these are both 5-year figures. So as for Pepsi, the past 5 years, the average dividends per share growth rate was 7.6%, which is absolutely awesome. That is really, really epic. As for Coca-Cola, or KO, the past 5 years, the average dividend per share growth rate was 3.6%. So, half the amount of Pepsi's almost. And this just depends on what kind of growth rate you're looking for, because there's a lot of dividend investors out there who aren't really fussed too much about the dividend growth rate. And of course that should be a key thing if you're a dividend investor, in line with inflation and so on and so forth. But it's not something that every dividend investor is, really concerned with. But if that's something that does concern you, then obviously Pepsi is definitely the choice here. Now, in terms of diversification, let's dive into Coca-Cola first. So KO has a number of brands that are household names, including Diet Coke and Cherry Coke, Sprite, Fanta, the bottled water Dasani, and Minute Maid, so the fruit juices. The company has more than 20 brands valued at more than $1 billion each, which is absolutely incredible. It continues to diversify. In 2018, the company made waves by acquiring coffee house chain Costa from Whitbread for over $5 billion. So there you go. So it was more than $4 billion, as I mentioned earlier. It was actually $5 billion. So that is a huge step in an amazing direction, and you'll see why this has influence on me a little later on. As for Pepsi is estimated to have 22 products, each worth over $1 billion, so more billion-dollar brands than Coca-Cola just off the bat. But Pepsi also sells snacks such as Doritos. So we saw that, their brand overview, and they sell a ton of the stuff. So with sports drink Gatorade and breakfast cereal Quaker Oats also in the PepsiCo portfolio, Pepsi has made diversification a priority. With the purchase of Tropicana in 1998, PepsiCo became the world #1 fruit juice market owner. So that was actually supposed to be another word there. But so you can see these are both incredibly, solid portfolios. And in terms of the diversification, they both have 20 or 20 plus brands that are each worth $1 billion each. So, if one brand was to go, tits up, as we say here in the UK, they would still have a lot of other brands that can make up for the loss and, just chime in whenever needed to. So that is pretty awesome. As for internationalization, that is a mofo of a word right there. With Coca-Cola, the United States accounts for about 43% of Coca-Cola's turnover in 2019. Mexicans consume the most Coca-Cola on the planet at around 225 liters on average per person per year, or about 2 cans per day. So I actually saw there was somebody, I think it was somebody here in the UK, Rishi Sunak, he's an MP, and he said that he prefers Coca-Cola over Pepsi, but what he orders is Mexican Coca-Cola. And you guys can correct me if I'm wrong. Mexican Coca-Cola, they actually use sugar cane as opposed to the high fructose corn syrup or whatever sugar is used in Coca-Cola, commercially around the world in many different places. So I think it's healthier. I wouldn't say it's a healthy product by any means, but the Mexican product, the Mexican Coca-Cola, is considerably healthier by any means, when compared to its American or European counterparts. As for Pepsi, the majority of their sales still come in the US, where the group makes 51.3% of their money. That's not to say that Pepsi has neglected the international market. In 1972, Pepsi became the first mass-produced Western consumer good to be distributed in the USSR. However, and this is something you guys have to know, due to recent events, investors are worried about Pepsi's 4% revenue exposure to Russia, which accounts for about, I think, I read it earlier, I think it was about $3.7 billion in revenue. that's the exposure to the Russian market. And of course, if you're familiar with what's happening right now, a lot of trade, a lot of investments, a lot of stuff, even the banking systems over there have been, cut off from the world, as punishments for what's happening in Russia. So that is something to keep in mind. Like billions of dollars is still a huge deal, and not one that will make investors happy at all. Their share price has dropped. But in the bigger scope of things, it is a 4% exposure. So, when you're looking at things in the long term, they've actually done pretty well to only expose 4%, of their portfolio or their revenue to Russia. But some would say 4% is too big of an amount to give to just a single population. But beggars can't be choosers. So you guys let me know what you think about that. As for strategy, so this one is pretty cool. So in terms of Coca-Cola, in order to maintain the exponential sales growth that they always have, Coca-Cola began buying into the entire chain of production. So they became vertically integrated, starting with the production of cocoa, the most profitable element of the production chain. The firm went on to take over its bottlers in order to increase economies of scale and streamline production. So they own everything from the bottling to the manufacturing to the distribution, which is pretty crazy. By 2014, it sold 80% of its volume of concentrate to its own bottling companies. In 2015, 3 Coca-Cola-owned bottlers in Europe merged to become Coca-Cola European Partners, giving birth to a group valued at $28 billion. So I think you can actually buy shares in Coca-Cola European Partners too. As for Pepsi have tried to follow the same vertical integration strategy, but are playing catch-up and have had limited success thus far. So this is not to say that Pepsi haven't been successful in their distribution. Of course, they absolutely have. However, Coca-Cola, they were first, to the punch, and they have created this go-to market strategy that is unbelievable, which allows them to literally pop up in virtually any country that you can do business, and really get sales, flowing like crazy. Not to mention their marketing strategy, which is absolutely insane too. Speaking of branding and communication, as Coca-Cola, historically Coke has had the edge here. The red can with the white swirl is an instantly recognizable brand that has become a symbol of the American way of life. Coke sponsors the biggest sporting competitions in the world, the World Cup, and the biggest fast food chain, McDonald's, partnering the latter for almost 70 years. So Coca-Cola and Pepsi, they always do their best to, partner with certain outlets, and they try to do it exclusively if they can, if their outlet allows them to, in order to get their products, in front of people's faces compared to their competitors. Coke even has a department entirely dedicated to the relations with McDonald's. So that is super duper crazy, and it shows how extensive their partnership and how important their partnership with McDonald's is. And yeah, that's a great move by them too. So a lot of people would think that's kind of like over the top, but when you're dealing with McDonald's, who could literally make or break a fair percentage of your sales, it's no wonder why they have a department directly dedicated to it. As for Pepsi sought to position itself as a younger, cooler alternative to Coke, as their 1980s slogan, "The choice of a new generation," would have us to believe. So I'm not sure if many of you are familiar with some of Pepsi's older campaigns, but they had Michael Jackson doing advertising campaigns to them. One ad actually went really bad and was not so great for Michael Jackson. They've constantly tried to play catch up in terms of marketing and branding themselves, whereas Coca-Cola has literally executed to the T so well in many countries, especially third world countries and emerging markets. So to pursue this aim, it became the main sponsor of the NBA in 2015, replacing Coke. PepsiCo has also tried to leave an impression on customers in China by launching a smartphone in 2016. So I think they're really they're just trying to get in front of as many people's faces as possible. I'm not sure if it's the right way about going about it. I'm wondering if they're wasting a lot of money, developing a smartphone that just absolutely murders, their costs and stuff. They have plenty of billions to go out and market many different ways, but I'm not sure if developing a smartphone and trying to go into that category of vertical is the right way to go about it. And then you have Coca-Cola, who is just so good at marketing and branding and stuff. They'll go into countries and offer people who don't have much money, hey, let me fix up your shop, let me paint your walls, let me get you refrigerators, furniture, all that stuff, but just sell our product. And this form of marketing probably cost them so much less than what Pepsi is trying to outdo themselves with. And so I think Pepsi's marketing team is a little bit all over the place, whereas Coca-Cola know exactly what they want to do. They want to be around for a very, very long time, and they want their brand to be ingrained in people's minds. Now, here's a quick 5-year overview. Now, we could have looked at a historical overview of both these companies, but I thought we'd look at the 5-year just because, we've been through some crap recently, and, especially with COVID, and I just want to see, how well these stocks recovered. So you can see Coca-Cola obviously took a drop in 2020, about February or March, and they recovered, and they actually were able to rebound. They've actually gained since that drop about 28 to 36%, if I remember correctly. I should put those figures on the screen, compared to PepsiCo, who have actually increased from their pandemic, what the hell is that? Pandemic lows of about 66%. So they've achieved greater growth. But yeah, it's very interesting how you wish to look at this, because, like I said, Pepsi do have that massive, snack portfolio, and, it's interesting to know the consumer trends during these times, because I'm sure a lot of people were snacking like crazy. So, that made for some, key advantages to, Pepsi's bottom line during that time. But yeah, that's why I said you guys have to do your due diligence at the start of this video, because I'm not doing that in this video. Now, as for my final thoughts, in my opinion, I love that Pepsi has a well-diversified portfolio between beverage and food. This allows the company to tap into larger consumer segments of the market, while it also manages to compete with Coca-Cola at a larger scale with its beverage portfolio. Where a customer might prefer Coca-Cola beverages over Pepsi, Pepsi can still leverage its large snack portfolio to tap into the same segments of the market. So, even if people are not so keen on beverages, Pepsi still has all of its snack markets. And then there's this too. So Pepsi is swiftly moving towards more healthy choices too, which could open the door to more growth opportunities. So their portfolio was actually about 30% good for you products, so like healthier products, and they've actually managed to increase that to 50% now. So it just shows how focused they are on really increasing their healthy food segment, which is somewhere where the market is trending to greatly. People are interested in all their vegan stuff, all of their single or very few ingredient products. So that is definitely something to look out for. But who wins? And this isn't just being biased. I love Coca-Cola, I love Pepsi. They're both brands that I consume and have consumed from. But in terms of future growth potential, and with their greater free cash flow and strategic acquisitions, I believe that KO is the better long-term stock pick, as they focus on building their hot drink segment with Costa, the most loved UK coffee franchise. This opens the door to compete with Starbucks over time, and allows them to have distribution networks of new snack offerings through their newly owned Costa stores. So although Coca-Cola doesn't have many snack offerings right now, as compared to Pepsi, the acquisition of Costa allows them to distribute any new snack companies they acquire or create through their Costa stores. So they can really own the market, and they can, in these Costa stores, which are thousands of around the UK, they can place not only their Coca-Cola products in their refrigerators, but also any new stock offerings that they have down the line. So, and this gives them a very awesome way to just, distribute their products in such an amazing way. So I'm actually kind of, thinking how Pepsi didn't think of this sooner, but here you go. This is KO's distribution mindset at work. So I do think long-term KO is the better pick. And yeah, but that leaves a question for you guys. Which do you think is the better stock to own for the long term? A question